So I had a realization today that Stephanie Link is the most powerful person on Wall Street. So we walk into the Rainbow Room, Mike, and Stephanie has what looks like the green room for our podcast, basically. Here's who's there. Karen Finnerman, Shannon Sakosha, and Bryn are on stage with Stephanie. In the back, Dan Greenhouse, Dan Ives, Tom Lee, me, Jason Trenner, Jason Snipe. Who else was there? Who am I missing?
Bill Baruch.
Bill Baruch.
The CIBC, the Belsky.
Belsky's there. Oh, Alex Kantrowitz is there. I'm like, what is going on?
Who's in the audience?
There was no audience. It was just like everybody from CNBC. Just kidding.
It's like 100 financial advisors that work at Hightower.
Okay.
And so I meet Stephanie's father, who I've met before, and he's a financial advisor. He's at Morgan Stanley. So I said, this is unbelievable. I can't believe like she threw this event. And he's like, well, she does this every year. I'm like, oh, all right. I haven't been invited until now. I didn't know this was a regular thing.
I think it was normally at the New York Palace.
Okay.
And then this year they moved it to the Rainbow Room.
I was just very impressed. When Stephanie asks people to do something, everybody says yes. And I'm an immediate yes.
Yes.
I'm an early member of the Stephanie Link fan club. So I thought that was pretty cool. That's a crazy view from up there, the Rainbow Room.
It was. Actually, the AI panel, because I sat through like most of the morning.
Yeah.
It was actually really useful.
Was Alex on that?
Yeah, it was Alex, Dan Ives, and Bill Baruch.
Yeah.
But Alex was talking about some really crazy things happening with AI. He was saying like voice is the big thing.
Okay.
Like the big application.
Okay.
And then he was saying like dating is like the second big application. And like
what, like dating apps?
Proxies for dating. Like people are interacting with their AI as if it's their significant other. He was saying that one company was talking about how like some people are training themselves to be better dating counterparts by practicing on AI. And so then they go on real dates.
Okay.
I heard that. I was just at T3 for advisors, and they were saying there's going to be a service that simulates a prospective client call.
Yeah.
That's pretty cool.
Yeah. And then Alex was saying that, I don't know if this is...
Practice dates, that's weird.
Yeah. Yeah.
I guess practice makes perfect.
Yeah. And he was saying like another thing was when ChatGPT added the Scarlett Johansson voice, that's when they broke out of the funk of users. They were like stuck at 100 million users. And then as soon as like they introduced her voice is when like they doubled in a month.
Are you serious?
Yeah.
And she got paid a lot of money for that.
Oh,
or
actually,
didn't.
No, she didn't.
They simulated. They did a fake voice.
I think she sued them.
Oh, right. Yeah. That's the story. Okay.
Yeah. And then so Alex was just giving anecdotes. And he said then another guy trained an AI model. I think it was like one of these where he trained the AI to handle interviews for him. And so then this AI has been doing interviews of like CEOs for him.
Really?
Using audio.
So the AI is having the conversation, and what does the guy do? He hits publish?
It's a clone. Like he's not even present for the interview. And then he's just reviewing it. And then he tells the CEOs that he just did it. And the CEO's like, oh, I was a lot more comfortable talking to this guy.
Wow.
So
maybe we could do the show that way someday. I don't know. Could we do? I don't think an AI knows what I would say though.
You're very predictable.
No, I'm not. I'm extremely spontaneous.
It would be very scary.
Well, I'm one of these people that just doesn't believe that AI interactions can truly replace human interactions. I know they can simulate an interaction really well, and I know it'll get better. But I do think that there are things that happen in the moment that you can't program in advance.
Yeah.
So
well, yes, I've seen like AI fakes of them pretending to be me, like on WhatsApp, and like me pitching a stock or whatever.
Yeah.
And I agree with you. Like it's like if someone didn't know me, they couldn't tell the difference. But since I know me, I can tell it's not me.
Right. So the question is, what percentage of the population can tell it's not you? Because you're not supposed to be fooled. Everyone else is supposed to be fooled.
Yeah. And
what do you guys do about those, by the way?
Well, our team, including Alexa and Jill who are here, we document it, the link and everything, and we have it on a spreadsheet. We provide it to Instagram and Facebook. And I know our attorneys are involved. Plus, I know because they've mentioned CNBC lawyers have been involved.
Yeah.
But it's impossible to police.
It's whack-a-mole.
Well, because
every day.
it's all coming from Africa and Asia, and there's no these are not jurisdictions where they particularly care.
Yeah.
So it's hard to block it.
Yeah, and there's been an imposter account that's me, but they won't, because they have more followers than me, they won't take down that imposter account.
I've had dozens of people impersonating me on Instagram, on WhatsApp, not as much on Facebook anymore. We reported this to the SEC, the FBI, we put in tips, here's a thing that's fake that's happening, and we're just making you aware of it. I have no idea if anything ever comes of that. And then finally we went to CNBC, and they sort of had a direct line into Meta to tell them this is fake, this is fake. And I guess we shut enough of them down manually one by one that whoever was doing those kind of just gave up. But I doubt that's a long-term solution.
Yeah.
The platforms have to decide that they actually care or not. And I'm not convinced the platforms really care.
Yeah, because I think it is algorithmically determined who's fake and real. There's not someone that's sitting at a computer getting the delete.
Who would have time to do that?
Yeah. So that's just, I happen to know that even we have had some institutional investor clients that they're a Fundstrat client, so they know our touch points only email and our app.
Yeah.
But they got duped to join a WhatsApp group.
My wife's cousin.
Yeah.
My wife's cousin's I bought a couple of those stocks that you said to buy.
Oh, boy.
Yeah. And they get rug pulled, right?
I said, what are you talking about? He's like, I don't know. I'm DMing with your people. I'm like, no, you're not.
Yeah.
On what? Where? He's like, on Instagram. I don't know. I was just scrolling and it was you saying to join this thing. So I just assumed it was real. I assumed you were getting paid from that. I'm like, why wouldn't you just ask me?
Yeah.
Why wouldn't you just text me? He's like, I just felt like it was you. I don't know. So
the fakes are going to get better.
Yeah.
They'll be able to answer personal questions that you think only you would know.
Look, it gets to a point where it's there's a limit to what you and I could even do. You could report it, you could document it, you could send links to regulators and say, hey, be aware this is a thing that has nothing to do with us, but it's happening. But I think at the platform level, and it's mostly Meta, Meta has to decide this is going to cost us a lot of money if we don't clean it up. And maybe they have. I don't know. I haven't heard about it in a while from me personally, thank God. So maybe they moved on to somebody else. But they're doing it with Ray Dalio, doing it with Bill Ackman.
Yeah.
I assume those people have more lawyers than I have. So I know we're not the only people lodging these complaints.
And then I on the New York Post, not to fork too much, but do you know I keep reading articles someone's mom was in a relationship with Keanu Reeves and sent all their money.
Yeah.
So it's not
just Wall Street scams.
Yeah.
It's scams, period.
Yeah.
Yeah. I got a text the other day. It was hey, I have your phone number in my address book and I'm not sure how we know each other. What's your name?
Yeah.
So I write back, F you. And they write back, no, seriously, I have your number in my address book. I said, okay, here's my bank account. And I just made up a fake number. And here's my PIN. And then the response was, ha, ha, ha. That's it. So I don't know. Is that a phishing attempt or? So my go-to response to basically anything at this point is this is fake. And I don't know what other posture could you have in this day and age?
I don't know about you, but are you also afraid to answer the phone when it's another number that you don't know? Because they say
I don't answer any phones.
Yeah, because they say they're trying to get you to say hello so they can sample your voice.
Ooh.
So you can pass, how your bank, when you call them now, you pass the voice test. They're oh, we verified you through your voice. So now if they just have your hello.
Oh, they're probably selling these voice files on the dark web along with
I'm
email
gonna answer
addresses.
the phone. Hello.
Yeah, use different pitch.
Exactly.
Yeah.
Or use an accent.
Sucks for them. I don't pick up the phone, so it'd be very tough to get me on a phone call. But they could use this podcast if they really needed to.
Tom, they're saying your hair looks incredible. What about his hair?
What? Oh, you have a flyaway.
Oh,
I would know nothing about that. His hair looks lovely.
Nailed it.
Okay.
Nailed it. It's Nicole. Tuck that piece under his headphone. You can do it. He doesn't mind.
yeah.
It's just one piece.
It's
Okay.
just one.
Look at that.
Perfect.
Do it mom style with a little
Are
bit
we
of
ready?
I
saliva.
miss those days. Let's go. Let's get it started.
All right.
3 claps. Compound and Friends, episode 181.
Today's show is sponsored by Cambria. Do you hold legacy investment positions with significant gains? What if you could transition into an ETF without facing a large tax bill? You can with a 351 ETF exchange. Here's how it works. Investors contribute stocks or other securities to a newly formed ETF in exchange for ETF shares. As long as the special rules and diversification requirements are met, the investor is essentially able to seed the launch of the ETF without an immediate taxable event. Because ETFs typically don't distribute capital gains, investors don't face taxes until they sell their ETF shares, allowing for better control over the timing of the tax event. Are you ready to explore a 351 exchange? Visit CambriaFunds.com/351 to take the next steps in innovative, tax-savvy investing with Cambria today. Cambria Investment Management LP is a registered investment advisor. The information set forth herein is for informational purposes only and does not constitute financial, investment, tax, or legal advice. Past performance does not guarantee future results. All investments are subject to risks, including the risk of loss of principal.
All right. What a show we have, ladies and gentlemen. This might be the most important show we do all year. Not to have too much of a build-up, but I'll tell you, when this sell-off over the tariffs started last week, I'm like, there's like certain people that I just need to hear from in this moment. And Michael's like, good news. Look who the guest is for next week. And I said, oh man, it's the GOAT. Ladies and gentlemen, we are highly blessed today. We have one of the compound all-stars in the house, somebody whom I know you want to listen to and learn from, especially at a time like this. Tom Lee is the CIO and portfolio manager at Fundstrat Capital and co-founder, head of research at Fundstrat. Fundstrat provides evidence-based research to institutional investors, wealth advisors, pension funds, family offices, and high net worth individuals. We love the high net worth individuals on this show. We always have.
Not those asset light folks.
No. Before co-founding Fundstrat, Tom was the chief equity strategist at JP Morgan from 1999 to 2014. Tom Lee, welcome back to the show. Thank you for being here. How you feeling today?
Well, I'm breathing calmly.
Okay.
But watching the market get in big chunks get chopped
Yeah.
on disappointing headlines.
Let's start here. Tariffs became finally. So a lot of people said, like, it's just talk. Wait until something actually happens. I think the market did. Like, the market was pretty calm up until the middle of February. And then all hell broke loose, and it's been cascading lower. And now the tariffs are like on officially, and we're getting exactly the reaction that anyone could have predicted. So I don't think the calls to like remain calm prior to this were bad calls necessarily, but this is one of those things where it's like, yeah, 2 + 2 = 4. Tariffs on, stocks are going lower, and that's exactly how it's playing out. You see it that way?
I do. You know, something I was thinking about this week, and it's been kind of hard for me to put into writing, is I think this is actually a lot like Brexit.
Okay.
Like it's a Magxit.
Yeah.
Because it's sort of like the new administration's trying to recast relationships, which was traditionally like sort of free trade, status. And if I look at Brexit, by the way, the UK stock market did fine. Like
it was one of the biggest buying opportunities of the last 10 years, the summer of 2016.
Yeah, and it didn't upend the economy. You didn't have an inflation problem or a growth problem. It was sort of like, the UK got through it. And I'm confident that that's where we are 4 or 5 months from now.
Okay.
Trump said this last night on TV because Josh and I were saying, like, what is he trying to accomplish? Last night he said, Tariffs are about making America rich again and making America great again. And it's happening, and it will happen rather quickly. There'll be a little disturbance, but we're okay with that. It won't be much.
Today he said, I'm not looking at the stock market at all.
Totally
So,
not looking at the 200-day moving average.
Yeah. Do you think that he expected this much of a stock market uproar? Or do you think he didn't think that much about it and just said, I don't really care about that?
I think that they thought one of the collateral hits to this would be the stock market. Because if they were like war gaming this and they said, okay, we're going to put these threats on and we want our other countries to take it seriously, they would want the stock market to decline.
Yeah.
Because if the Dow and the S&P were rallying, they'd be like, no one's taking it seriously. So I think they need the market to do this, but they don't want to cause a stock market induced recession, or a stall speed in the economy. And so I think that these indicators like yields falling, probably they wanted, but then they don't really want consumer confidence to fall. They don't want negative jobs report, because all of a sudden this risks a recession. And recession dynamic is really dangerous. I mean, I think there's no inflation interpretation in the stock market. It's interpreting this as it's really going to hit growth.
We have $1 trillion, some would say negative, but I don't think of it that way, but fine. We have $1 trillion trade deficit with China. If we lose $5 trillion in equity market cap, and we assume a fifth of the stock market is held by foreigners, so we eat 80% of that $5 trillion drawdown, did we win? What was the prize that we won?
Yeah, I mean, that's a Pyrrhic victory, right?
I'm not sure. I'm not sure. In other words, okay, number one, we're still going to have $1 trillion trade imbalance with China by the time this is over. That probably isn't going to budge much. The Canadian trade imbalance, trade deficit is $155 billion US, not that much money. $5 trillion coming out of the S&P. I just don't understand where the victory is.
Yeah.
So,
well, I mean, on the one hand, I'm not sure if it's still the same thesis, but originally the premise was fentanyl and tighter borders. And if that's the benchmark, then this is easier to see the end to this trade war. But if the tariff idea is to recast the economic structure to create the VAT and then eliminate personal income taxes, then it's going to be very messy.
So walk me through that. The idea is this is the route by which we have other people paying us taxes in the form of tariffs, and then the give back to the U.S. consumer is we can eliminate income tax.
So we're paying the taxes. Is my understanding of this wrong? The importers are paying the taxes. It's us.
Yes. I mean, in theory, it is us to the extent it's passed through.
Which it is.
Of course.
Right, because at the point of entry, at the ship, it's really the person who purchased it, which is generally a commercial, that did it. And then what percent is able to be passed as a higher price?
All of it.
Why do you think tech stocks are getting hit so hard? You wouldn't, if you made a list of the economically sensitive sectors of the market, and then you weighted that list by how much or how little they require the passage of goods to cross borders. I understand the NVIDIA angle, I guess, but just generally speaking, I'm watching Netflix.
Netflix is down 8% today.
I'm watching Netflix lose a fifth of its market cap slowly and then quickly. I don't understand.
Yeah. I mean, I can see two things happening. One is people are betting on a consumer that's weaker. I mean, that's why even Fed fund pricing of more cuts is moving up.
Yeah.
But the second is tech companies are global companies, and they're going to be the retaliatory victims. That's the easy person to do sanctions against is Google, Apple.
They're doing business in Canada. They're doing business in Mexico.
Yeah, in Europe and China.
Tom,
some in China, some not at all.
Yeah, it's Singapore, but you don't know where it goes from there.
Do you see the biggest risk to the market as the fact that we're trading at high multiples? If we're trading at 26 times forward and we're not actually earning whatever consensus is 260, whatever it is, and we actually earn 245, then the multiple is even higher than it already appears. Is that the big risk here?
if the trajectory of earnings is impaired, that's different than if you're delaying. You're taking a 2-quarter hit because of the tariff uncertainty, and stocks might go down on both, but one's a huge buying opportunity, right? Because if you're just talking like a 2-quarter blip on earnings, but then everything goes back to normal after that, then we've created a huge buying opportunity.
Is that your assumption that that's going to be the way this ends up going?
I'm almost positive because we've been comparing Trump 1.0 to Trump 2.0. And the two markets that have really diverged compared to Trump 1.0 is Germany and China, because they've both been outperforming.
Yeah.
If this tariff war was going to create a long-term economic weakness, like China and Europe can't even rally.
Trump hasn't done any tariffs against Europe for the time being. I just assume he hasn't gotten around to it, but that's coming next. That might change that dynamic. But you're right. Like so far, people are buying European equities.
Yeah, because no one can be like, oh, well, U.S. is going to have a recession, so I'll buy Germany.
No,
Right?
It doesn't work
Yeah.
that way. I agree.
So the Tax Foundation is saying we estimate the average tariff rate on all imports would rise from its baseline level of 2.5% in 2024 to 13.8% if the tariffs President Trump has proposed were imposed. The average tariff rate on all imports under Trump's proposed tariffs would be the highest since 1939. Daniel, throw this chart up. So this is a hell of a wild spike.
You know, if this math plays out, and I don't want to
Wait, where's 2018 on here? That's
That little blip.
oh, I see. Okay, so if we were to repeat that, that's where the level would be.
Oh, I mean, this looks like it's like shooting up past
Way
2018.
past.
No, we haven't gotten to 2025 on this.
No, this is real time.
Oh,
That's
it
what they're
is?
showing. That's what. Oh, wait a minute.
But you're right. The scale, yeah, because you'd think like
Oh,
220
I
has
see.
to
Yeah,
go
you're right,
over-
Michael.
Yeah.
You're right.
So anyway, they're saying that the 25% tariffs on Canada and Mexico would reduce long-run GDP by 0.2%, reduce hours worked by 223,000 full-time equivalent jobs, and would ultimately cost $1,072 per household.
I would bet way more than that. Like I don't know. I read like a couple of things about just the auto situation alone. And I know now there's a carve out for autos because the whole thing's a farce. But just for argument's sake, like raising the average price of an SUV by $8,000 or $9,000, which is what the net effect would be, given how frequently these things have to cross both
Yeah.
the Canadian and the Mexican border. It just seems like, well, if you got elected because people were really pissed off about high prices, which I know is not the whole story, but it was a pretty big part of the story. How does this answer that problem that people had? It seems like it's just going to exacerbate it. So
Yeah, I mean, for that reason, it obviously doesn't make sense that these tariffs are the permanent structure for Canada and the U.S., which are natural partners, and Canada and, I don't want to necessarily quote everything, but at the panel today at the Hightower Conference, Day of the Stars, Brian Belsky was talking about Canada and, him being a Canadian or knowing Canadians, he was saying,
don't ever call him a Canadian. He's one of ours. We claim.
yeah, that's right.
Belsky's from Minnesota. It's almost Canada.
Yes, that's right. I'm from Michigan,
Yeah.
but I'm like far enough away.
Yeah.
I'm not. He was saying that some Canadians think that this is like part of this is to pressure a change and accelerate the change in leadership in Canada, and then they just recast a new deal.
Okay. If this lasts for 2 quarters and by the summer it's like fading away, maybe it's a little bit 2018-ish. But the thing about 2018 is what's different about 2018 versus this year, they were raising rates. The Fed was raising rates during this tariff madness. In part, I think, in response to the tariffs, they thought they had to. This time around, at least, that's one thing that we're not contending with. We have a Fed that's quote unquote on hold, but probably with a bias to cutting. I saw that the rate cut odds, we talked about this on stage today, shot up for 4 cuts this year. Now a 30% probability of 4 cuts. Even if you got 2 cuts, I'm not saying that offsets the tariffs, but it's a different backdrop than 18, where Powell was saying things like, we are nowhere near neutral, meaning we're going to keep hiking. Of course, we know they didn't end up doing that, but at least we don't have a Fed that's making statements like that right now.
Oh, yeah, because the Fed's already comfortable that they've got a big margin of cushion where rates are. They're already running tight.
Right.
And now they're assessing how much damage it's doing to the economy before tariffs. And this is the thing, like we know a lot of the supports have been rolling off at the start of this year. That's why consumption's down. And then tomorrow's a jobs report, but already it's foreboding, like the Challenger job cuts ADP. You know,
Yeah.
if we get a 50,000 jobs report tomorrow, there is not really, there's a huge question on this dual mandate because full employment, I mean, we're risking, a real collapse in the employment market.
Does the market rally or get killed on that sort of print? I think it gets killed.
What, a bad jobs report?
Like that bad.
Yeah, I think there's a panic, but then there's a rally.
Yeah.
Because I think the Fed put is back, and then I think the Trump put has to come back.
The Fed wants to cut. So this does enable the Fed to cut. It's just not the circumstances under which it wanted to cut.
Yeah.
I don't think the Fed wanted to have to cut. I think the Fed liked the position it was in, where it was like, we will if we need to.
Yeah.
Man, maybe we'll do one. Maybe we'll skip a month. Like that's where they were. They can't be there still. Now they have to. Now they actually might have to react.
Yeah, I mean, in a way, the bond market. I mean, I'm sure people interpret. I think is arguing the Fed is late to cut.
Okay, why? Because of what the 10-year has done, or
Yeah, where the 10-year is, with the implied, like even the odds of a May cut. I didn't see it today, but I bet you it's well over 50% now.
a cut in May?
Yeah.
Oh, I would bet it is.
Yeah. So that's a Fed that's actually kind of being now judged to be behind the curve. And so if they're cutting, it's going to be a welcome pressure valve release because the market's pressuring the Fed to do something.
Right. Market people love to look at AAII and act contrarian to that. Last week, one of the things we were talking about on the show was how fast the bears shot up to an almost record level, like higher than they were during the pandemic in that survey. I think the percentage of bearish respondents hit 55, which is an unheard of number. And then when you consider the fact that at that time the S&P was only 3% off a record high, it was really weird to see how fast sentiment turned negative. In hindsight, a week later, that bearishness was not a great contrarian signal. The bears had it right. Mm-hmm. What do you think about that? I know you follow AAII.
Yeah.
You look at that stuff.
I follow it, and I think from the right time frame for us is like 6 months.
Okay.
Because then it captures, because the survey is done over a period of time, and so it doesn't always capture what the market did that week anyways.
Okay.
But
it's cumulative, you're saying?
Yeah. It's kind of the same thing like when these economic surveys are done. Sometimes they're done finished by Wednesday or Friday, and then so you actually get some weird differences because of what's happened in those 3-4 days.
Okay. So go ahead, finish it up.
But I remember in a prior podcast, we talked about how people's time frames have changed.
Yeah.
And maybe because maybe the world's more short-term focused. But, with instant liquidity, I think that's why people can go from bull to bear because they can act with a push button now.
Yeah.
Instead of calling their broker and getting talked out of it,
they could put on a hedge with one ETF. They don't have to figure out an options trade. They don't right?
Yeah.
Like they can instantly decide, you know what? I don't like the looks of this. I'm adding, double negative SPY ETF for like 10% hedge against my portfolio.
Yeah. And institutional world is the same way.
Yeah.
So Tom, last thing on some of the trade stuff before we get into the markets, which is what you love to talk about, and so do we. All right, so 3 charts and then we'll move on. Mexico, China, and Canada are our 3 largest trade partners. Daniel, chart 2, please. The 3 of them, again, Mexico, China, and Canada, by far the top 3. They make up $1.3 trillion worth of imports. That's 42% of all total. Next chart, please, Daniel. 42% of all imports are from those 3. And I was really surprised to see Joseph Politano had a great chart that showed imports spiked in January amid tariff fears. So the fact that consumers are adjusting their behavior so quickly to tariffs, you can only imagine how quickly markets are going to react to potential tariffs. And we're seeing that already. Does this chart surprise you?
I don't think that's consumers. I think that's producers pulling in inventory as quickly as they can to get ahead of the tariffs.
Stockpiling.
Okay.
Yeah.
You're right.
That's what I
It
think.
says consumers and businesses rush to buy goods. You're right. Yeah, I'm sure.
I
But
think that's mostly business. I think that here's where it hits home, like just like a weird example, but this is from my actual life. We're redoing the outside of our home, and we're doing real cedar shingles. I live in a world of aluminum siding, and I can't stand it anymore. So the product's coming from Canada. We priced it out. Our builder is like, this is like literally the best version of cedar shingles. This is where we're going to get it from. This is what it costs. Okay, I don't know if we ordered it or not, and I don't think my contractor is like watching the State of the Union or anything. So I actually don't know now what this project's going to cost, and this is to wrap around the entire house. Like that's going to make a material difference. Had I really thought a lot about it, I might have called them up and said, place the order. So now I'm not saying I'm not going to do it because I still have to go home and live with my wife at night. So we're still going to go forward, probably no matter what it costs. But I know there's going to be a difference. I don't think there's a carve out for shingles. So like that's an example. But we're consumers. I think that spike that Michael just showed, I think that's people getting ahead of this, knowing they have to buy stuff and just buying it.
Yeah, it's going to be a PPI.
Yeah.
It's category.
Okay. Do you think that of all the opportunities being created by this trade stuff, that the obvious thing to do is to let everything sell off and then look for the companies that are probably going to be least impacted by tariffs over the next quarter, and maybe that's a trade idea? Or has that been so picked over by AIs and portfolio managers that there's probably nothing there? What would you guess?
If someone's going defensive now, they have to be betting not just that it's 2 months of tariffs, but that this is a new regime.
Okay.
Because exactly what you said, it would have already been discounted because the bond market has been picking this up, and then the stock market is reacting, I think, shockingly badly, but it already gave us the ripple hints in February.
So let me push back against that a little bit. The S&P is down 6.5% off its highs. The NASDAQ is down almost 10%. The VIX is
25.
I mean, this is like a sell-off for ants.
Yeah, it's an orderly.
Right? This feels pretty normal and pretty. I mean, the average stock, Bespoke tweeted, the average stock is down 30%. So there are plenty
From
of
what? From all-time high?
Yeah.
So
there's plenty of stocks that are getting absolutely mauled. I know the S&P doesn't tell the entire story, but I don't know. It feels like a little bit early to be like, that's it. We're done. We're good.
Yeah. Although if, the chart you showed about imports, it kind of highlights that we've already front-loaded the tariff war because it's China, Mexico, Canada. And then everybody else is like smaller fry.
Right. Do you think that there's a universe where there's a one-off deal with Mexico, then there's a one-off deal with Canada, the China thing stays on, and the market just kind of reacts to, all right, this is the way the year is going to go? Or you think that the tariffs are just like, we're doing it now, then they all come off and we just stop this en masse?
Yeah.
What do you think is more likely?
I mean, I know China's tweet or comment today is what sort of made the futures weak in the morning.
Yeah.
But
Which was what? We're ready to go to war?
Yeah,
we're good?
we're going to dig in on this.
Yeah.
But I think, as you know, the problem is in China isn't in the same position as it was in 2018. So it's not as if they can fight a long economic battle here, especially because of all the things they're trying to accomplish in China itself. So I think, of course, a lot of that is gamesmanship. And the intention is, if I was China, I would say that because I'd want the S&P to fall more, because if the S&P falls enough, then the White House put comes back. So it's, the stock market is kind of caught in the crosshairs right
I
now.
assume you don't see a bear market coming, like a full-fledged 20%er.
It's possible because it's been a couple years, but this would have to be because there has to be a layered shock on top of this. Like if the Fed, like for instance, if somehow the Fed decides that the economy's weakening, but they choose to fight inflation and let a recession happen. So in other words, the idea is, well, we've been wanting a recession to kill inflation, like let's just let it happen.
Yeah.
Then we're going to have a big drawdown. But that would really require a Fed that decided the employment mandate wasn't important because, a recession, we just, like once a recession starts, there's no such thing as like we can engineer a mild recession. I mean, it's like you could have a severe recession because you just don't know.
You did too much damage, and now things like it starts to feed on itself.
Yeah.
We're doing fiscal austerity at the federal level. At the same time, we're going to do this trade war. So maybe that fits into that category of the shock that you're talking about.
If prices go up on top of all this, and we've got stagflation, then yeah, sure, we'll have a 20% bear market for sure.
Yeah. So I mean, you can see why people want to maybe start to be nervous and price it in.
In 18, by the end of February, the stock market was down, I think 17%. And it happened really fast, just like this time. And people at that time were saying it's orderly. And they were right. It was. We bounced all the way back to the prior high, but then we got stuck there. The tariff thing was like sort of cooling off, but then we had another problem. I think we just kind of had this air pocket where corporate earnings weren't great.
Yeah.
Had a manufacturing recession for sure. And then by Christmas Eve, we were in another 20% drawdown. And the thing that pulled us out of it was Powell's about face. I think he gave a speech on Christmas Eve and he said, just kidding about the nowhere near normal thing. And then in the first quarter of 19, we were already cutting. We were already so there was some of that going on. And so having like those two, call it almost 20% corrections inside of 1 year, that's pretty rare. But we did. We lived through it.
Yeah. And that was a first-term president that didn't have necessarily the administration he wanted to have with him because remember there was so much turmoil.
Yeah.
And it was a newly minted Fed chair.
Yes.
So today we have an experienced administration and a very experienced Fed. So
okay.
So like would the Fed even want to dabble with a bear market that could trigger recession? Like I'm going to just say even if there's partisan issues involved, right? Because you've seen I do think there's a partisan element to maybe some of the Fed talk. This would be it would really blemish the history of the Fed. It would blemish the legacy of the Fed.
You mentioned Treasury Secretary Bessent. Have you met him? Have you ever spoken with him?
No, I have not.
Okay. What's your impression of the things he's saying about he's saying we're more focused on bringing down the yield of the 10-year, which like obviously the Fed, what the Fed does, they're trying to enact policy that will affect overnight rates, which, there's a limit to what that will do to intermediate term rates and long-term rates, but it's like that's what the Fed does. Bessent talking explicitly about lowering the 10-year. How does that strike you? We haven't really heard. Janet Yellen didn't do that kind of thing or didn't talk about that kind of thing. How did that kind of talk strike you? What's your impression?
Well, I mean, from a couple hats, I can see where it makes sense. Like if I looked at it from the economy and what would heal the economy, and someone said, would higher stock prices heal it or would getting mortgage rates down matter more? And you've talked about this, like that's really important because that is going to help housing, cost of money, and it really benefits a big swath of consumers. And we already know there's a lot of stress because of the high cost of installment debt, et cetera.
Here's my stupid question. Hypothetically, this works and the 10-year Treasury falls. Mortgage rates come down, like meaningfully. Doesn't that just raise home prices? Or what am I missing? Like, what does that heal? So people are paying a higher price for their home?
It'll lower their monthly payment. It'll make payments affordable again.
Yeah.
Okay.
It unlocks liquidity because I think
that part I agree with.
Yeah.
If people can move again, I think it's good. But home prices are not going to come down.
Prices won't fall.
Right.
Yeah. I mean, home prices are doing weird things anyways. Like the Northeast, they're still going up, but like there's a huge surplus in Florida. So the real discovered price is much lower because no one's transacting.
Yeah. Okay.
I mean, in a way, home prices could fall because you'd actually start to see real trades happen. And so maybe home prices
There'd still be so much more demand than supply, even if supply gets unlocked. Chartkin Matt made a chart that I smelled it was a timely special. And of course, all credit to you, this is a timely special. It's the VIX 1 month contract above the 4 month, which in recent memory has marked a bottom. Daniel, this is chart 6B, please. Too early to say? What do we think?
Wait. Can you explain this?
Tom, why don't you narrate this?
Yes. So it's going to take a minute or two. the VIX.
We got time.
Yeah.
We got time.
Most of us think of the VIX as a spot index, like, oh, it's measuring the expected volatility over the next 90 days. So that's what the spot VIX is. But it's actually a financial product, and people trade VIX contracts, but nobody trades spot VIX. They trade the 1 month VIX, 2 months, 9 months. I think there's even 24-month VIX.
Right.
The normal VIX futures curve is upward sloping, which they call
Either contango or backwardation.
yeah, like, and like I always get the terms mixed up. It's like starboard and port.
50,
I'll get it
50,
wrong. Yeah, so
exactly.
it's upward sloping
Okay.
because there's time value. Like, oh, future VIX should be higher because you got time value money. When the VIX does the opposite, so the 1 month contract is higher than the 4 month.
Meaning a 20 VIX 4 months from now, but a 25 VIX today.
Yeah,
So
or
that's
like
intuitive.
30
That's
VIX.
backwardation.
Yeah, so
Okay.
that inversion is what the bottom histogram chart shows. So when it's like pointing up, that means the 1 month is higher than the 4 month.
What does that mean to you, though? How do you interpret that? That's a short-term bottom?
Well, it means,
tradable-
yeah. So what the markets have now priced in is that the volatility has an expiration date.
Oh, okay.
Got it, right? Because now you know it's going to
So
be
now you
within
can
the next
see
3 months.
through to the
Yeah.
worst. You can see past the worst of the near-term volatility,
Yeah.
and that could be a signal that it's time to buy stocks.
Yeah. So if you have a time frame beyond that contract, then you're like, oh, well, volatility is going to be lower in 4 months. And we all know if vol's down, value at risk goes up. So 4 months from now, if volatility's down, risk
Okay.
is on.
So this chart goes back to January of 23 and correctly points out these were inflection point moments where the market got too negative and this VIX contract flipped itself to where all the volatility was supposed to be short term and then the longer term volatility was cooling off.
yeah.
And those were great moments to buy stocks.
Yeah.
What is this telling you today?
I think that this is like we're sequencing a picture that panic is approaching.
Okay.
But the panic is, of course, that the spot VIX needs to now spike to a level because people are seeking instant protection, right? So
Okay.
30, 40 VIX, that hasn't happened yet. But if that's happened and this has already happened, then it's already like you have the hair trigger pulled.
So for your clients, and I'm sure the answer is it depends, would you be likely to advise them to seek opportunities on the way down or to sort of wait for a clear, definable hammer sort of bottom?
Well, if someone was really good tactically timing, then nobody wants to buy on the way down. But I've never been able to say on this precise date, you'll have enough liquidity to buy at the low. Because what usually happens is the low is established, the market's rallying, but it's already retraced 50% of the decline.
You don't know it's the low
No.
until a week later.
Yeah.
Well, the longer it goes, the lower it goes without them pulling the trigger, the more likely they're going to not pull a trigger because if we go lower, it gets scarier.
Yeah, it gets to become a buyer strike.
Right.
You
Exactly.
think, I might sound naive. I think a 35 VIX over tariffs, I think you just close your eyes and buy the index. Is that like naive to
Yeah.
think that that's just going to work so easily?
Yeah, I agree. Because I think we do have to be mindful. There are 3 puts out there. There's the Fed put,
Okay.
and the Fed doesn't want a 35 VIX. The
Right.
White House put, the 35 VIX also risks financial instability and things going haywire. and
35
currency.
VIX would normally be accompanied by like spreads blowing out
Yeah.
in the bond market. We're not seeing that yet.
Yeah. And there could be some like financial bodies floating up. You know what I mean? Like it
Yeah.
might kill somebody.
What's the third put?
White
It's a
House put.
sovereign wealth put.
Oh, sovereign wealth put.
Right.
Tell us about that.
Because we already saw progress. They named a Morgan Stanley banker
Mm.
to be the head of the sovereign wealth fund.
Grimes.
Yes.
You know that guy?
I do not know him.
Okay.
But let's say it's a $7 trillion sovereign wealth fund.
This is an American sovereign wealth fund. Where does the $7 trillion come from?
I think that's a floated around number.
But it's like, what is it? It's Fort Knox? Just here, you trade this? I'm trying to understand like where the money for that comes from.
Oh, well, I think it would probably be the issuance of a debt security. So it's a funded.
So more
sovereign-
debt.
Yes.
Okay.
Oh my God.
It sounds somewhat abnormal to be
But it may
running
not be considered
7%
federal.
deficit and then build a sovereign wealth fund that's also funded by more
Who's
debt.
managing it?
Yeah.
His name is Grimes. Michael?
Yeah.
David? I don't know.
Yeah. And,
Quentin?
Quentin Grimes.
but remember, there could be, remember the Treasury during GFC had the TALF and all these like multipliers. So
yeah,
what
those
if-
were basically sovereign wealth
Yeah.
funds.
So what if it's 7.5 trillion plus private is another, BlackRock's another 30 trillion of it. Then this is like, you can
But what
buy
are
the
they
entire
doing with-
stock market.
But what are they doing with it?
Buying our bags, duh.
They're buying stocks? Is that the purpose?
Well-
or are they investing in startups? Or
I mean, Panama Canal, they buy Greenland.
Panama Canal. Oh.
all right. So
Right. You know what I mean? Like you could
So,
buy
all right,
a lot.
let me just understand this.
You could
So
buy a
the-
large chunk of the world.
The number that's floating around is $7 trillion. There's a banker from Morgan Stanley who has a $7 trillion bank account effectively, where he uses that and buys the Panama Canal.
Well, to advance American interests.
It sounds bullish. All right, got it. I guess
I mean, you could take NVIDIA in-house, right?
Absolutely. Let's
but-
do it. Take
but-
it private for sure.
But just thinking out loud, like Saudi Arabia, Qatar, these places need sovereign, Malaysia, they need sovereign wealth funds.
Yeah, they're gushing cash.
Because, right. It's a one industry country and they want to develop real estate and they want to build their own middle classes and they want to make investments that diversify the economy so that they don't all have Dutch disease. They don't all have like this resource curse. Okay. Makes perfect sense.
They'll all be really big LPs in the American Sovereign Wealth Fund
So they'll get to invest in our sovereign wealth fund.
as
Okay.
a sidecar, side pot. I'm kind of theorizing, but you know what I mean? Like
Yeah.
side
Something
pocket
tells me
investment.
there's going to be a Trump hotel and casino in every country in the world. Is going to be the net result of this. All right. So that's a put. The White House put, you said, is not really a thing, or at least not yet, but it will be.
Yeah, I think it will, because if the economy slips into a recession, you can't have Doge, tariffs, and fiscal austerity.
Okay.
So right now,
So it unwinds literally everything.
we
Okay.
are, this is the 6th day in a row. This is from Dietrich. It's the 6th day in a row on Thursday that the market is going to be up or down 1%. 6th day in a row. It hasn't happened since November 2020. And you're starting to see some signs of early panic. Next chart, please, Daniel. This is from JP Morgan via Jessica Menton. In the first hour of trading, now this was yesterday. In the first hour of trading, the so-called retail investors yanked $1.2 billion out of the U.S. equity market, the largest pullback during that time period since JP Morgan's data began a decade ago. That's meaningful. So in other words, yesterday at the open, people said, get me the f*** out. They
Yeah.
dumped stocks. Additionally, this is from Ned Davis. Their daily trading sentiment composite is down to 20, which I don't know what's in here exactly, but that's extreme pessimism. So it's this weird sort of dynamic where we're not that off the highs, but the news is so newsy and noisy that people are freaked out.
Can I
And-
add
and
one
maybe
more
for good
thing to
reason.
that? We just hit, I don't know if it's an all-time record, but we just hit a fairly high level of people tapping their 401ks early. And that seems like it's of a piece with people yanking money out of the equity market.
What? Say that one more time.
We hit a level, I think Meb shared this. I'm not sure exactly what the number represents, but it's an extreme in people tapping their 401k.
Well, that's not good.
Either borrowing against it or outright making early withdrawals.
That's not good.
I'll look
That's
into
more
it.
economic
but
than stock market. But we also had the put call ratio spike yesterday.
Yeah.
So there's fear. I don't know if it's a bottom fear, but a trade.
Yeah.
But it's
And I'm sure the depth of market, like this market is super thin. Now if someone sells, you're going to just see comets falling out of the sky, like on
But
specific
do you
stocks.
think that sentiment shift and the stuff that Michael just showed you with like outflows, do you think that stuff is at all connected with not just tariffs, but like people working for the federal government, people work at companies that are contractors for the federal government? So not just public sector employees, but private sector employees whose companies' fortunes are tied to how much money the federal government spends. Because we talk to people in the DC area, there's like legitimate concern in not just in DC, but like anywhere that people do business with the government, that revenue is not going to show up. So do you think that a component of this is not just about tariffs, but it's about people actually worrying about their survival?
Yeah, like there's a real soft patch coming.
Well,
Yeah, because
70,000 buyouts of federal employees and talk about laying off. They're going to lay off 7,000 people from the Social Security Administration. They're laying off IRS agents. That's nationwide. That's not
Yeah.
just in DC. So I think there's some component of people pulling money out because literally they don't know if they're going to have to live off of it.
And that's why I like real estate listings where there is a lot of federal employment, whether it's Arizona or Arlington, Virginia.
So that's not tariffs. That's this fiscal austerity. That's a whole other thing.
Consumer spending got crushed and savings not skyrocketed, but savings was up big time. So people are bracing for impact.
Yes. Now, I might actually say if the federal government is reducing its spending and it does create this collateral damage, that's actually good for the economy because we know that has crowded out private sector spending, right? The government crowds out the private sector. So that's actually a positive that this is being redistributed in that way, the spending.
Yeah, but it's ugly in the short term.
Yeah, because it creates distortions.
Well, you're gonna see one in the next employment report or the one after that.
Yeah.
Because it's thousands of people. Like it's not a small number.
Jobless claims in Washington, D.C. have quadrupled.
Yeah. Okay. So there's a component to this that's beyond just tariffs. It's uncertainty about employment.
Yes.
And that's what's creeping in. And that could feed on itself.
And by the way, that's why it's hard to say, how could this be inflationary? Because if people say wages create the second wave of inflation, but we have a softer job market.
I don't think it's inflationary at all. And I disagree. It might be, there might be some commodities where there's a dislocation and it's short-term inflationary, but I don't think government austerity is inflationary.
Yeah.
I don't see it that way.
That's right.
Okay.
And I don't know if you guys track Trueflation, which I've kind of found is actually pretty decent.
Okay.
That's now at 1.4% year over year.
That's what they think is the current rate of inflation.
Yeah, using like 2 million consumer items. And then they map it to the BLS category.
One more thing on economic data then, since you brought that up. One of the charts that went around this week, including me spreading it, but like a lot of people were sharing that GDP Now chart. And I know there's some funkiness about the turnover from January to February with some of the data. Let's not take this as an actual forecast, but that's a pretty extreme drop. We went from a 2.8% GDP Now reading from the Atlanta Fed to -4.
Yeah.
Outside of the pandemic, can you recall a drop-off of that magnitude? Even if there are all these nuanced reasons for why it's data related and not, or it's a quirk of how they collect the data, it still seems extreme.
Yeah, it's big. I mean, it does paint a picture that economic momentum has slowed. So,
or the brakes have slammed on. It looks like to me. Okay.
That's right. At a time when we know even businesses are saying that they've gotten cautious because they don't know what to do with tariffs. So that's why if you look at the markets, they're pricing in a growth slowdown from tariffs, not inflation. And so the Fed, I think the White House wants the Fed to kind of get off neutral. And I think it's increasing, looking like the Fed is behind actually.
So if they really want the 10-year Treasury to fall, the yields, keep going. Because that yield is not pricing in inflation anymore. Now it's pricing in recession.
Yeah.
Or starting to.
That's right. And then and the only difference is nobody wants to even get within 10 yards, a touchdown of stall speed because it's just too easy to slip into a recession.
Okay. Can we do this one, Mag 7? Or what do you have queued up?
Tom, what are your thoughts on the Mag 7? Some are getting hit harder than others, but I mean, Tesla's getting destroyed.
So this is, for the people listening, Mag 7 performance year to date. The only green one is Meta, up 8%. It was up a lot more. Microsoft -6, Apple -6, Alphabet -8, Amazon -8, NVIDIA -17. I think it's more now.
Well, if you anchor them to their highs, it's obviously, significantly worse than this.
Tesla -35, which is a really big deal. What's your take on some of the damage here in these companies? None of which are manufacturing autos other than Tesla.
Yeah. I mean, if anyone had owned these before 2024, then they're still sitting on huge gains.
Okay.
Yeah. So, it's really any new buyers of these are down, but that's really, that'd be like shame on you because you bought it.
You bought the highs.
Yeah.
Okay.
But I mean, like I look at this and I'd say, you know what? I think Tesla and NVIDIA, they've been hit the hardest. Do I think that their future trajectory is worse? I actually think that they still look like great companies. And it's not like, in Tesla's case, it's not like their competitive position has worsened. It's probably strengthening.
Tesla's competitive position relative to other EV companies.
Yeah, and their leadership in, let's say that there's, like, if you ask a technologist, what's the next big thing? It's going to say robots. Tesla's, country mile ahead of a lot of people on robots.
Okay.
So it's not like being down 35% has changed their competitive position.
If you had to make a guess, if an announcement came out tonight, Elon stepping away from the government, like, I've done everything that I set out to do. I'm going to leave my team in place. I'm going to go back to focusing on Tesla. Does Tesla stock go up or down on that news?
Well,
Here's why. Wait, let me tell you why I'm asking you the question. The stock had a massive rally when Trump won the election, and Elon was at the inauguration, and there was just this assumption that, like, him having that proximity to the White House was going to be amazing for Tesla. That narrative shifted in the last 10 days to Elon is either distracted or destroying the standing of Tesla in the eyes of half the country and most of the world. So I'm curious what you think.
Yeah.
And I'm not saying I predict that's going to happen, but if that happens, he says, I'm all set. We did everything and I'm good. I'm coming back to Tesla. Does the stock rally because he's not distracted anymore? Or does it sell off because he's not in Trump's good graces?
Well,
What do you think would be the reaction?
I'm going to just imagine why this is happening.
Okay.
So let's say he steps aside because Doge found the $2 trillion or $1 trillion. So he's like,
We did it.
yeah, we unleashed the algorithm. And so he's going back to Tesla.
Right. I could picture this, by the way.
Now he can profit from his time in the government.
Okay.
He couldn't profit while he was here to help Tesla. Now he goes back to Tesla. Tesla becomes like the official vehicle for like everything the government does. Like,
Yeah.
Tesla probably goes
20%.
Yeah.
I mean, it's down. It's in a huge drawdown, so it wouldn't be that much of a surprise if it did that.
Yeah.
What do you think?
Yeah, I agree. I think it would rally pretty hard. Hey, we should have started the show with this, but is the bull market over?
Yeah. By the way,
Yeah.
is the bull market over?
No.
You don't think so?
The bull market, I would be surprised if it's over. So I shouldn't say no like I know because I don't know. I'm sorry. But I'd say the probabilities are very remote because if you look at all bull market major tops before a 40% drawdown since 1900, all of them could have been predicted with a 40-year lead time based on births
So you think
and
so
immigration deaths.
that demography thing is
Yeah.
still enforced no matter what they do to try to mess it
Yeah,
up?
that's right. Because if you cut the population by just 20-year intervals and you mark the peak of each cohort, it marked the 29 top, the 74 top, the 99 top, 2018 top, and the next major top shouldn't be till 2038.
So you're not talking
Wait,
about
hold
the
on. Hold on.
cyclical bull.
Wait,
You're
20
saying-
what? What was the year?
2038.
All right, I feel better now.
But you're not talking about the cyclical bull market then. You're talking about like the 2009 run up until
Yeah,
now.
so a major,
Okay.
the kind that could unwind the entire bull market.
All
Okay.
right, so we have more than a decade. I feel better now.
So we're okay.
There's also some seasonal stuff going on that I think you'll find interesting, Tom. This is from All Star Charts. I think this is Grant's work. Year one of a bull market, obviously, up and to the right. Year two of a bull market, by definition, up and to the right. Year three tends to be pretty disgusting.
Which is where we are now.
Yeah. This is I've seen this chart and I'd say I don't necessarily have problems with how this is constructed.
That being said, no? I thought you were about to fillet it.
Oh,
it's-
yeah, but
it's
I
an
can say-
amalgam
yeah.
of many
Yeah.
bull markets.
But the one thing I'd say is that there's wide distributions in year three. So there's actually plenty of 20% years.
Okay.
So it's not like, because this chart makes it look like you're only going to be 5% and like you hover like
It doesn't show all of the distributions.
Yeah, so this is because as wide the distributions are, year three also reflects bull markets end and then you have a huge decline.
True.
Very unscientific. Year one, we had an underwhelming start to the bull market. And some would argue it was only 7 stocks going up. And that's partly true. Year two, that's last year, far outperformed what the average bull market. And then this year, and again, I understand, but still, like we're kind of really perfectly tracking what the history has been.
Being chopped to shit.
Yeah, he must be doing like non-calendar because like 35% He has 35% in year 2.
They're not calendar people. Hey, you have a chart that shows. So this is now year 3, as we're talking about, year 3 of a bull market. We had 20% 2 years ago. We had 20% last year. And you have a chart, much better than this All-Star Charts chart. You have a chart showing that the second half after a back-to-back 20% year tends to be pretty lousy.
Yes.
What are we looking at here?
This is all years that had 2 consecutive 20% years preceding it. So that's like that first vertical line says year 0. And then we're just saying, what does that 12 months later look like? And as you can see, you might be okay in the first half, but the second half is usually tougher.
Sorry, is that 1880?
I saw that too.
Yeah.
Is that like Yellowstone?
Tom was digging deep.
Okay. So this is not.
We were like still shooting pistols.
Yeah.
We're not following that. We're not tracking.
So this is not wildly out of character for what typically happens after you've had a big run in stocks.
Yes.
The reason why I believe in this stuff is because it's just human behavior. Like the variables in all these years are different. Tax rates are different. Inflation regimes are different. Republican president, Democrat president, like all of that stuff is interchangeable. But the
mood,
the component of this that's not is how people trade.
Yeah, because it's eventually
It's fear and greed.
we know good news gets priced in, and it's
Yeah.
hard to determine. But then after a certain amount of time, people might get complacent or whatever you'd call it.
Okay. What's this one? Are we doing this?
Yeah, we could skip that one.
Okay.
Tom, you were bullish earlier. I don't know if you still are about small caps, and I think one of the reasons why we have your chart is that the S&P is driven largely by tech stocks, but the Russell 2000 has much more exposure to rate-sensitive industries. So, is the thinking that if the economy weakens and rates go down, that the Russell would maybe go down less than the market, or do you think that it would outperform in a bull market? What's your thinking here?
I don't think if there's a recession, small caps outperform. So like on that downside, I don't think it's protected. But if we look at the composition here, I actually am surprised it's done so poorly because, for instance, healthcare is the best performing sector year to date, and you can see healthcare is a bigger weight in small caps. Financials have done well year to date. It's a bigger weight in small caps. Industrials have outperformed year to date, and it's a bigger weight. You have less exposure to tech. And
So what's weighing the small caps down this year?
I think it's the push button because
Just people saying sell small caps.
It's higher beta.
Yeah, so they're derating. They got cheaper.
Okay.
Oh,
not
wow. Small
because-
caps are down 15% in a 50% drawdown. I didn't realize that.
Yeah, so that it's not like someone's doing relative value.
They're selling the ETF.
Yeah,
They're selling
just
IWM.
Selling IWM.
It's like the first thing people sell.
Yeah.
It's like, oh, you're worried about the economy? Get that shit out of here. We're not
Yeah.
going to need that. We'll buy it back later.
Yeah.
Yeah,
But as
I
you know,
agree
what's
with you.
working this year is like financials, industrials, healthcare. That's like that's already more than half of the Russell. So it should be a good index, but and I think the individual stocks have been, but as an index, hasn't worked.
All right. One fly in the ointment on the inflation side is if the Fed thinks they have to about face. This, like to me, if you ask me what's the biggest risk that people aren't as worried about now as maybe they should be, it's if the Fed says they're not tight enough. And the only thing in my mind that could drive that is not commodity prices from tariffs. I think it's like the labor shortage and the immigration story feeding into that. So I want to ask you, do you think this is inflationary? This is CBS News this week. The number of migrants crossing the U.S. southern border illegally in Trump's first full month in office plunged to a level not seen in at least 25 years. This is CBS News. Look at this. Border Patrol recorded 8,450 apprehensions of migrants who crossed into the country unlawfully. On some days, during a record spike in illegal crossings under Biden, they had 8,000 apprehensions in a single day. So what was happening in one day under Biden is a full month under Trump. And of course, this is by design. This is what he promised the voters. This is what voters want. And he's actually carrying this out. But the point is, as we all know, some of the best areas in the economy in terms of their contribution to growth have been helped by migration, illegal and legal, leisure and hospitality, everything that feeds through to travel, the airlines business, hotels business. Like, unfortunately or unfortunately, migration is like what feeds that beast. And if we don't go into a recession, I could see a scenario where we start worrying about hoarding of employees again and people just not being able to get enough workers. And that was part of the inflationary spiral of the 2020 to 2023 era.
Yeah.
Do you worry about that? Do you think that's inflationary?
I actually just have two counter perspectives.
Okay.
So first, I think it's definitely positive evidence that properly integrated my immigration works because that's Texas, right?
Yeah.
They welcome immigrants. But the difference is that I think a lot of the border crossings have not led to productive employment because, as you know, the employment rate of the migrant, the crossings is actually really low.
Yeah.
And so they're actually more of an institutional population. So the ratio, like if you look at hospitals or prisons, when someone's under care, one job is created to take care of like 10 institutionalized people.
Yeah.
So we've actually created wage inflation because the migrants.
Oh, that's interesting.
Because you have to house them, because you didn't construct facilities, you had to rent hotels, and you had to hire workers to actually manage all these people, and then you
hire workers to deal with migrants who are not coming into the country and getting jobs.
And then you have to give them EBT cards, so it's actually all inflationary.
Yeah.
Italy reduced their border crossings. And it had the same profile of not highly employed crossings, and their economy is doing better.
Okay.
And actually, it's not led to inflation. It's actually led to improved growth.
Okay. So this is not something that we need to worry about stoking inflation, having less migration.
Yeah. I don't know how it's going to be implemented, but if ICE is not, they can't boot 20 million people, but if they're targeting, criminal gangs and stuff, I think it's actually going to be positive social fabric.
Well, I do too, and this is what the people voted for this time around. This was like a really big issue. Yeah,
and for someone who thinks Trump doesn't like migrants or immigrants, all of his properties employ many people on.
Shh, don't say that.
So I think he knows.
The mics are on. Yeah. All right. And he's a builder, so he's aware.
Yeah, very well aware.
Okay. Polymarket probability of a U.S. recession hits 38%. What do you do with this stuff? It was highly predictive of the U.S. presidential election. Do we throw it out when they try their hand at economics and not politics?
Can someone pull up the dollar amounts for contracts for that?
It's like $18. No, I don't know. But we know it's mostly overseas, the people who are doing these bets. But I don't know what the dollar
because
amount
if
is.
It's not involving millions, someone is just making fun bets.
Can you find out like how much money is betting on recession?
Yeah,
on Polymarket?
usually on the website it'll show you the total contract volume.
What is this?
Outstanding.
I'm looking at. Keep going. Give me a minute.
Okay.
I'm not on this thing a lot.
Okay.
That's why, with the elections, it was hundreds. Like there was actually $1 billion of open contracts.
big money.
So you knew it was real money.
Okay, let's say this is a lot of money. What would your thoughts be about like the meaning in something like this?
See, let's say that gets to 50.
Yeah.
The White House is playing with fire and Fed's playing with fire.
Okay. So you think people should be paying attention to this?
If this is liquid, the Fed better be watching this.
All right. I'm going to tell you right now, before Michael finds the number, and we may not find it, I'm going to tell you I doubt it's anywhere near as much money as was betting on the election. I just don't think people randomly are like, let me place a bet on U.S. recession. I do think everybody wanted to place a bet on the presidential election.
That's right.
So let's assume this is not as liquid.
And this looks so choppy. It looks like one trade swings this thing.
These are not large bets.
They're not, right?
No.
Yeah, I wouldn't bet that it
Almost
is.
all of them are under 10 grand.
What do you think about probability markets in general?
I think it's
Are you fascinated by them?
It's an experiment, and I think it's super useful.
Okay, I agree. I'm not sure how, but I could see it becoming part of the toolkit of people that follow markets and the economy. Okay. We did that already.
Let's talk about granny shots.
Yeah. So you launched an ETF. I told you not to do it, but I only told you not to do it because I'm so protective of you. What I said was, oh shit, now he's going to have a quote unquote public track record that people are going to harass him about when the market goes down. But you didn't care. You're not afraid of what people think. And you plowed through and the thing was received pretty well. People
Dude,
are into it.
almost $1 billion in assets. And you kind of just launched it. That's incredible.
It's amazing.
Thank you.
All right. So let's for people that haven't heard your previous appearances here and are unaware of the concept here. These are stocks that you think are like layups, basically. And Granny shot like shooting a free throw underhanded, like Rick Barry.
Yeah, and you
Okay.
want to own it. You're not trading them.
Yeah.
So we're trying to find essentially what's equivalent of like, like your idea of permanent stocks. But we do rotate it. But the reason we sort of have this idea is we have themes that like span multiple decades. Cybersecurity, millennials, AI, Fed cycles.
Okay, so your idea is that these are stocks that are enduring. The story behind them is bigger than the stock itself.
Yeah, they're linked to generational ideas.
Okay, I love that idea.
And we only add a stock that appears in more than one theme. So you want to say like, hey, these are the stocks most linked to cybersecurity, but let's say that's 50 stocks. But then we want to say, is it linked to any of the other 6 themes? So it has to be appearing in at least 2 themes because then we figured there's 2 legs to support why the stock
so
will
if one
work.
story goes away, it's on there for a reason.
Yeah, it's anchored. Yeah.
Okay.
Does that mean that you wouldn't own a stock like CrowdStrike, which is like purely in one theme?
Well, CrowdStrike is actually a granny shot.
AI and cybersecurity.
Yes, that's right.
Yeah.
You're good, Josh.
Yeah.
All right, so I have a million questions. How many holdings?
There's 35 stocks.
Is that static? It will always be 35?
It's not a predetermined number, but has always ended up averaging around 35.
How close are you trying to get the initial position weighting to the other weightings? Are we trying to equal weight or
yes,
not?
it's quarterly rebalanced to equal weight.
Okay.
And it would have done better, as you would know, if we never rebalanced, because NVIDIA has been part of the granny shots list since 2019.
But that's what you're telling people. I'm rebound. In hindsight, would you have done a semi-annual rather than a quarterly? Because you're going to throttle the best stocks, but
Yes,
you're
it
also
does
going to
throttle.
reduce volatility. So it's kind of a double-edged sword by rebalancing that frequently.
Yeah, and it ends up being under 100% annual turnover.
Okay.
So it's not like we're turning over the portfolio. And the ETF has the tax efficiency because no one's having to sit through capital gains through the rebalances. So that's advantageous.
Okay. So it's all right. So it's 35 names right now. They're roughly equal weighted, and then during the course of the quarter, they're going to move around, of course.
Yeah.
So, like for example, your top 10 names: Progressive, Apple, Abbott, Garmin, S&P Global, Bank of New York Mellon, Costco, Palo Alto, Microsoft, Netflix. So you have Mag 7 names in here, which makes sense. They probably addressed 5 themes.
Correct.
How does Progressive Corporation become the largest current weighting in the index?
Part of that is just performance since the rebalance for
Insurance
Progressive.
stocks are doing really well.
Yeah.
Yeah.
And Progressive is actually linked to a seasonal theme. So it is linked to the
Like
PMIs.
the power of Christmas.
The
Okay.
PMIs. So we look at like what is correlated to PMIs for this period. So that's like what we call a seasonal rotation.
Okay.
But Progressive is a millennial stock because, when you look at who, like millennials will account for like 72% of all the growth in financial services spending.
Wow.
So companies that are innovative are going to do really well because millennials essentially buy their it's like a growth industry within financial services.
Okay. So Progressive is, of all the insurers, that's the one that best represents that theme.
Correct.
How do you decide that? How much of this is quantitative versus like somebody like really looking qualitatively at these companies?
It's both. So we have a quantitative process. It's called DQM. So it is actually, it's the quantitative
Yeah, the Dairy
expression
Queen
of,
metrics. Sure.
yeah,
I'm familiar.
of all the work I did at JP Morgan, we built a single quantitative model. And so
Okay.
that is what runs to improve the quality breakdown. And then we do have a technical view from Mark.
Okay.
And then we, of course, look at the company, make sure it actually fits the theme. So it's a multi-step process.
Are there knockout factors? Like if one of these companies says, oh shit, we have to restate 3 quarters worth of earnings, will you guys immediately get out of it so that there's like this quality?
Yeah. So in theory,
maintenance?
super micro,
Yeah.
in the research version of the granny shots, it used to exist in it, and it was a very big performer. But then as soon as there was auditing and compliance, it couldn't qualify.
So you guys will get people out of those names immediately if there's some sort of some sort of factor that is just like, we can't be in this while
Yeah.
that gets sorted out.
Now there was a drawdown with Supermicro. So, but it had already produced a lot of returns for the granny
Okay.
list.
What kind of feedback are you getting from the investors in the? There's probably a lot of people that don't buy your research, but they're fans of yours because of you appear and you make commentary. So now people feel like they can like invest in some of your ideas.
Yeah.
What kind of feedback do you get from those people?
It's been very good feedback.
Wait till the bear market.
Yeah. Well, there is a lot of hand holding that's required.
As an ETF.
Huh.
Yes. And so what we do,
What do you do? Webinars?
I do a weekly video that is available to the public, but we have, I think, 35,000 people who signed up for the Granny Shots distribution list, which you can from the website, grannyshots.com. And we push out a weekly video so they know what's happening to holdings.
That's what you should use AI for. You should not be forced to do that.
Yeah.
Weekly video is a
Weekly.
lot.
It is, but we found people say it really helps them understand what's happening with their money.
So it helps them hold the fund.
Yeah.
That's really critical thing.
Yeah, so we're
is-
not hiding that there might be some, Palantir hit or NVIDIA hit, but then in their minds, they know that how to contextualize that, and it's not a mysterious.
You know what else is useful about that? In the process of talking about the fund, over time, people could get a better and better sense of how you think about the holdings themselves and the way that you invest.
Yeah.
Like not just the companies specifically, but like what would make you sell it? What would make, right? Or
Yeah.
what would make you keep a stock?
Yeah.
So that takes time for people to really learn.
Yeah. Like in the video we just released, we explained the whole idea of millennials and how much they're going to represent of like babies born and cars, and why if you did a similar generational bet with the boomers, you vastly outperformed the market. So you want to find the stocks that are most tied to millennials right now.
Is this the start of a product suite?
Yes.
Who'd you put this out there? Is this Tidal?
Yes, we worked with Tidal.
Okay, so is Tidal calling you like every day? Hey, Tom, your next $1 billion idea, please. Like we're ready. What do you got?
Yeah.
Okay.
It's Tidal and many other providers have contacted us with
International
ideas.
granny shots?
I think international
Can I give you a great
sounds-
name for it? Abuelita, right? Spanish for
Abuelita,
You don't hate it.
Small grannies,
Small little grannies?
young
Yeah.
grannies. Tom,
Smid grannies,
Granny aristocrats? I don't-
grandpa.
Grandpa shots.
Tom,
All
we
right,
gotta get.
Congratulations, dude.
We can't let
Thank
you
you.
out of here without talking about crypto. You've got a chart in your deck that shows Bitcoin going to 5 million.
Yeah, say the craziest thing you can about crypto so we can clip this for TikTok.
How are we getting to 5 million?
Now that's
Slowly.
Yeah.
Slowly.
And then all at once.
Yeah.
By the way, if you got to 5 million, because we have a grid to show it, it's that gold would be doubled in price.
Daniel, previous chart.
Yeah. Gold would double in price.
So this is if crypto reaches parity with gold in
Yeah.
terms of market cap?
Yes.
Okay, it's not there already?
No, it's only 10% of the value of gold.
Wait, what? How much gold is there in the world?
There is
10?
$21 trillion of gold.
How much crypto? 3?
Bitcoin's 2.
Bitcoin by itself is 2.
Yeah.
Okay. So if the amount of money millennials choose to put into digital gold rivals the current amount of gold, you know what the flaw in that logic is? If there's this huge predilection for Bitcoin versus gold on the part of millennials, then the valuation of gold will shrink. So there's like you might get parity, but that's because the amount of money in gold goes down.
Yeah. I thought about, and I got the numbers a little wrong. Let's say gold has to go to like $7,000. However, I heard something interesting, and I didn't realize gold has outperformed the S&P 6 of the last 7 years.
Yeah.
So
Quietly too.
yeah, so gold isn't a bad asset class, but Bitcoin. So I think even if it's not like millennials need to buy gold for gold to go up, you just
Okay.
need the boomers to hold it.
You need central banks
Yeah.
around the world to buy it and hold it, which
Yeah.
they are.
That's right.
Okay. Do you get involved in any of these conversations about Bitcoin reserve? Like, are you talking to people that are involved in this at all, or not really?
Well, there is. I'm not going to the White House
Okay.
this week. I'm
Okay.
not invited, but
Okay.
we do have conversations with Congress people.
Okay.
But
Are they like, Tom, what do you think if we do this?
Do you think it's a good
they're
idea?
like, can you pump my coin?
Yeah,
Is it a good idea? Why would we have a Bitcoin strategic reserve?
I think it makes a lot of sense.
Why?
Well, we already have one. We've confiscated
That's
Bitcoin.
not all right. But why do you think it makes sense?
Why should we buy more?
If Bitcoin becomes the backbone of a new financial system, which it really is, like, it's the king of the remittances. It's it is the immutable blockchain, and people have a lot of reasons that they trust it. In 14 years, no one's broken it, and there's no replacement. Then if the US owns 1 million Bitcoin, they'll be the largest holder of Bitcoin.
But we're just what are we doing with it? We're facilitating trade with it, or we're just holding it?
Well,
If it's a strategic reserve with a strategic petroleum reserve, they use it when there's like an oil shortage, or there's a problem, or there's a dislocation. They will tap the reserve,
but yeah,
and then when prices calm down, they'll add it back. How does Michael's question, like how does a Bitcoin strategic reserve function?
Okay.
Would there be a shortage of Bitcoin? And we have to,
like to what end?
These are good questions, but
Yeah.
keep this in mind. So oil's a strategic commodity.
clearly.
Okay. Now, oil only has 7 buyers, really. It's the refiners. Oil, like, that's produced everywhere, it's really just bought by refiners.
Who then turn it into something
Yeah,
useful.
to distillates and gasoline.
Okay.
But there's really only 7 buyers. And so if you look at oil, the oil market that's bought for distillate, and then take the total trading volume of oil against that, what do you think the ratio is?
I don't know, tiny, right?
400. For every dollar of oil that's bought at a pump,
I
it's traded
see.
400 times on speculation.
Wow.
Wow. Okay.
So you need a strategic petroleum reserve because there's so much price speculation around it that
Okay.
you could be whipsawed if you didn't control some way to manage prices.
Okay. So Bitcoin is the same.
Yeah, so let's
Tons
say
of
Bitcoin,
speculation around
let's say
it.
that it becomes 10% of people's net worth and banks start to use it to secure information. Because remember, the blockchain, you can just store 1 pixel of a 10 million page document, but the hash will detect if you changed 1 pixel. So that's why you're going to use the Bitcoin to secure information, right? Well, that's really valuable, but then wouldn't the US want to be able to control this blockchain or exert some way to censor it somehow?
Okay.
And, once banks start trading Bitcoin, like Citadel, it will probably be the most profitable product for Goldman and JP
Because of
Morgan.
how volatile it is,
Yeah.
bid-ask spreads are wider.
Correct. And if
Okay.
oil's traded 400 times, Bitcoin might be 1,000 times. It's going to be a hugely traded commodity.
Okay, so this is a productive thing, even though, to my earlier point, we have a budget deficit, we have tons of debt. This is a project that we should also undertake now because it might come in handy at some point in the future.
Yeah, well, the US owns 200,000 Bitcoin, as long as it's not, those keys are safe.
Okay.
And so let's say they buy 800,000 more through the Exchange Stability Fund, so another 80 billion.
If they do that, I think the price goes to $1 million too. I just don't know if they're going to do that.
Yeah. But then if Bitcoin gets to 36 million, there's
Yeah.
no national debt.
Okay. In that fantasy, who do you sell the Bitcoin to pay off the debt, though? I've heard that before.
Michael Saylor, hello.
So Michael Saylor buys the Bitcoin from us, and we use the proceeds to extinguish our debt.
Well, it's not, you don't need to sell it because it's almost the same thing as like if NVIDIA is 3 trillion, it's not like someone would say, oh, well, you're going to liquidate all 3 trillion, so it's not worth 3 trillion. It's as long as the value is stored at that level
Okay.
and you can still trade
Then
it.
we could say it's an asset that offsets the debt that we have. We don't have to use it to pay down the debt.
Yeah.
We could just say we're backing that
Yeah.
debt with this asset.
I'll guarantee you if Bitcoin got to 36 million, okay, theoretically, the US cost of debt would go to 0.
Okay.
They would have because they have 0 net debt.
What's going to happen on Friday?
I think, okay, so the base case, I think it's a really bad jobs report, maybe 50,000. I think the market panics, but Powell's speaking at 12:30, and you're going to see the May odds 100%.
Because Powell's gonna make it all better. Like he's gonna calm people down. Like we're aware of the situation.
Well, because this is like now with Atlanta, GDP now negative, and then jobs. This is not like the Fed can sit there hawkishly.
It's sort of funny to have a day where there's a jobs report that disappoints. The market's been selling off all week. It gets even worse on Friday, and Powell has to compete for airtime with Michael Saylor because the White House is filled with crypto people.
Yeah.
It's going to be a wild day.
Yeah.
Well, Tom, this has been awesome. I have one more thing to share with people. You have made available access to Fundstrat Research for our listeners for a 30-day free trial, and we want to tell people where they can do that. Can I tell people?
Yes.
Okay. All right. I'm supposed to read this. If you are an experienced self-directed investor looking for trusted insights to grow your wealth, check out Tom Lee's Fundstrat Research. When you sign up, you'll get access to his daily insights, market alerts, live webinars, AI, doppelganger, and stock lists. Exclusively for listeners of the Compound and Friends, Tom has provided a link for a 30-day free trial. Visit fundstrat.com/Tom. That's fundstrat.com/Tom. You can also find a link in the description below. That's very nice of you. It's very exciting.
Yeah. Well, we love the show.
Dude, thank you so much for being here. We're so happy to be able to spend time with you. We always close out the show by asking people what they're most looking forward to. I think for Michael, it's the Crypto Summit in DC. What are you looking forward to?
I'm looking forward to Future Proof.
Oh, man.
Citywide.
Look at
It is going to be the highlight of my spring and summer.
you. Okay. What day are you on stage? Do you know?
Monday.
I should probably know that. Monday. Okay. Very cool.
Good answer, Tom.
I'm going to the Museum of American Finance's annual gala tonight. And do you know that organization? You familiar with them? Okay. They would love to have you there. They're honoring Peter Lynch tonight with a Lifetime Achievement Award.
wow.
So I think I'm going to get to hear him speak. I don't
That'd
think
be amazing.
Yeah. And that's like one of the goatiest goats who's ever goated.
Yeah.
So I'm pretty pumped about that. You got something for us?
Yeah, did we talk about the show that we're going to see?
Which one? Glengarry Glen Ross?
Yeah.
Very confident in my assertion.
It's Ben. Yeah. You like plays? Go to shows?
Yes. In fact, I think our firm is doing a field trip to watch that.
You're going to
Get
go?
out.
Yeah, because it's like an iconic.
We're
Oh,
going.
yeah.
We're
Yeah.
going. I don't. What's the date we're going? 20th.
Maybe we're going on this. It's not a lot of dates. So we
yeah,
might be
it's
going
like
on the same date.
It's like the day before the ETF Awards Center. So I think it's like April 22nd.
Okay, we're going in March.
Okay. Very
Yeah.
cool. Yeah, we're going a little bit sooner than that, but I'm so excited for that.
Bill Burr, Odenkirk, Kieran Culkin.
It's a crazy cast when you think about
Yeah.
it. All right, very cool. Hey guys, thank you so much for listening. Our special thanks to Tom Lee, and huge thanks to the team. We did so much stuff this week. Daniel, Duncan, Rob, Graham, Keith, Sean, Charkid, Matt. Who else? Nicole. We got everybody. The list keeps getting bigger. All right, shout out to the team. You guys outdid yourselves this week as always. And hey, leave us a rating and review. We'll be back soon.